everyone. Today we're going to complete the accounting cycle as far as we're going to go in this class. You have done all four of the first steps. We've been working on adjusting entries, on adjustments. Then you prepared adjusted trial balance, move on to preparing income statements, which you have done, and then we're going to close the books for the time period. So an adjusted trial balance is nothing different than what we've already done. You take your T accounts, and the yellow column here shows the unadjusted trial balance. You enter those adjusting entries, which we've just been talking about previously in this chapter, and then you have the adjusted trial balance that shows all of the income and all of the expenses and the corrected asset and liability accounts to then prepare your financial statements from. So, preparing the financial statements from an adjusted trial balance, let's go back through the steps to prepare a financial statement. You prepare the income statement using revenues and expenses. That's all that's on the income statement. The income statement is revenue minus expenses equals net profit or net loss if you've had more expenses than revenue. Number two is you prepare the statement of retained earnings using the beginning retained earnings plus net income less dividends, and then you get the ending balance. Step three is the balance sheet. I've told you the balance sheet is nothing more than the accounting equation. Assets equals liability plus owner's equity. You put in the assets, you put in the liability, common stock, and then you pull the updated retained earnings from the statement of retained earnings. We are not going to move to cash flow statements in this class, so we don't need to worry about that. All right, so we've got this adjusted trial balance, and we move forward and do the financial statements. We have the cash, total assets, we have liabilities, long-term notes payable, we have the common stock. So here's our income statement. Fees earned, expenses equals a net income of $15,000. Our retained earnings on December 31st was $45,000. We move forward the net income, which was $15,000. We subtract dividends. So our retained earnings as of December 31st, 2012 is $40,000. All we have to do now is move that number down under owner's equity. Total equity is $70,000, and our balance sheet balances at $115,000. You guys have done all this before, so this isn't new information. It's a repeat of information, but sometimes it takes a couple of times to really understand how the flow of financial statements works. All right, so now, actually, I'm going to go back one sheet because I need to talk to you about this for a second. All right, you know that fees earned and expenses on the income statement are what's called nominal or temporary accounts, as well as dividends are a nominal or temporary account. Everything else is all liabilities, all assets, and owner's equity is our permanent accounts. So on December 31st, when we end this year, we want to know the total of income, the total of expenses, the total of dividends paid out, and that all goes into or comes out of retained earnings. So the owner's amount of money that is kept in the business is retained earnings. So what we have to do is close those nominal accounts, move them into retained earnings, get that account correct, and then next year we start over with zero for revenue and expenses and dividends. Permanent accounts are asset, liability, and owner's equity accounts, are not temporary accounts. If we have a piece of machinery that's worth $50,000 at $11.59 on December 31st, it is still worth $50,000 at 12:01 a.m. on January 1st, so we don't close those permanent accounts. Okay, so the closing process resets revenue, expenses, and dividend accounts to zero at the end of each period, and it summarizes the period's revenues, and expenses into an income summary account. So it is not required by GAAP to use an income summary account. You could close these accounts directly into retained earnings, but if you make a mistake, you don't have any way to balance that. And then in this situation, they prepare a post-closing trial balance, which is just one more column of adjustments and then the post-closing trial balance. All right. So temporary and permanent accounts, we close expenses, revenue, and dividends into a summary account. We don't touch assets, liabilities, and common stock, but after we do the left side, we close the income summary into retained earnings. So income summary is just this account that's open for one day while you're making these adjustments and closing the accounts, and then an income summary account is not used again for a whole accounting period until you do it again. So we've got this ledger account, a T account called income summary, and we close credit balances in revenue accounts into income summary. We close debit balances in expense accounts into income summary. We close income summary into retained earnings, and we close dividends into retained earnings. So here's how it looks. Depreciation expense, salaries expense, insurance expense, rent expense, supplies expense, utilities expense, all had a debit balance because they're expenses, so their normal balance is a debit. We credit that amount, clean those accounts out, move them to zero, and we move the total of income of those accounts into a credit in the income summary. Revenues, we do just the opposite. We debit income accounts to clear them out. We credit the income summary, and that leaves us with $3,785. We move that money into our retained earnings, which is a credit because it is a owner's equity account. We debit retained earnings for the dividends, we credit the dividend account, and we see that our balance now is $3,585. Well, lo and behold, that number should equal the number on your retained earnings statement. Because we just have to take all those revenues, all those expenses, move them to retained earnings, and get that account correct. Then we take all those accounts, we just add another account, another adjustment column to it, and our income statement and all of our balance sheets are then completely correct. And we're done. So we're done with this chapter. I'm going to upload some problems, and then we will be able to work on those in class. Everyone have a good weekend, and I will see you on Monday. Thank you.